A good late afternoon and thanks for joining us. I'm Sage and you're watching Kalkine TV live from Sydney. And this is the last show of the day, the last trade. And there's no better way to wind down the day than with the market close commentary. So in today's show, we'll take a look at the overall ASX 200 performance of the day, and we'll also explore the gainers and losers. We'll look at some of the details of the companies that were in the news today as well. And in the last segment, we'll take a look at the Asian share market performance and especially see why Japan's Nikkei was the best performer in the region, rallying over 2%. In the last segment, we'll also see why the cryptocurrencies are trending. So let's dive straight in. And the Australian share market ended higher on Friday, snapping 2 sessions losing streaks, led by gains in the blue chip mining and biotech firms. The rise in the commodity price, as well as S&P Global's economic outlook upgrade, also boosted the market sentiment. And the credit ratings agency S&P Global raised its 2021 global economic growth outlook to 5.9% on acceleration in vaccination drive, raising optimism for the Australian economy as it seeks to avert a recession. The ASX 200 closed 0.5% higher, and during the day's trade, the index gained as much as 0.7% to hit an intraday high. Overall, the ASX 200 settled the week with 0.46% gains. The market breadth indicating the overall strength of the market was strong as 8 of 11 sectors ended in a green zone. The materials sector emerged as the best performer with a 1.3% gain, followed by utilities, which rose 0.9%. Energy, healthcare, consumer discretionary and financial sectors also witnessed a surge in the buying activities. Meanwhile, the information technology sector emerged as the top laggard with 0.75% loss, and the loss in the tech space was led by Afterpay, Xero and Nuix. Snapping the previous session losses, the materials sector emerged as the top gainer despite continued falls in the iron ore price. And the iron ore slipped by another 1% as curbs in China's steel industry continued to weigh. Sector heavyweights BHP Group, Rio Tinto and Fortescue Metals were among the top gainers, and in a similar trend, the energy sector extended the rally for the third day, owing to a rise in the crude oil prices. Brent crude rose 1.6% and the US oil gained 1.6% as well. Now on this note, let's shift our lens over to the top gainers and the top losers of the day. Beginning with the top gainer on the benchmark index, who was mining company Orocobre, which rose 7.1%. And some of the other top performers were Australia's biggest independent coal miner, Whitehaven Coal, miner Alumina, and the healthcare firm Clinuvel Pharmaceuticals, as well as a biopharma major Mesoblast. Now on the losing side, the mining firm Ramelius Resources topped the losers chart by falling 3.3%, and some of the other notable losers were buy now, pay later major Afterpay, steel manufacturer BlueScope Steel, and plumbing and bathroom supplier Reece. Moving on now, let's focus on the shares that hogged the limelight today. And first up, the shares of Australia's largest buy now pay later player Afterpay declined nearly 3% intraday as it faces threats from technological giant Facebook. The shares tanked amid the reports that the social media giant Facebook has launched its Facebook Pay product in Australia as a test market. The latest offer by the California-based firm would heat up the competition within the booming payments sector. Also making the news, shares of biotechnology company Mesoblast rose over 4% after the company's CEO assured that the US Food and Drug Administration was not halted the development program of its key drug. And moving on, the share price of blue chip miner BHP Group rebounded over 1% after falling over 7% in the intraday trade on Thursday after the stocks turned ex-dividend. The world's biggest miner had shared on the 17th of August that it will be paying a final dividend of $2.71 Australian per share. And we've reached the time for a break, but stay tuned with me on Kalkine TV as I'll be back with more companies making the noise today. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back. Thanks so much for joining us. Sage here. You're watching the market closing commentary on the last trade show by Kalkine TV. And we're discussing the companies that grabbed the headlines today. Now, engineering services firm TechOcean Group extended the fall for the second day after making a weak debut on the Australian Securities Exchange on Thursday. The company has successfully raised 6.6 million Australian dollars via its IPO. Founded in 2007 in Gippsland, Victoria, the company intends to use the IPO proceeds to expand its existing and new business, as well as to meet the capital investment needs. And next up is Flight Centre Travel Group, who continues their gaining streak for the second day, rising over 1% after signing of a corporate travel joint venture in Japan. The company is in an exchange filing, saying on Thursday that it has formed a JV with Tokyo-based NSF Engagement Corporation to launch its leading FCM travel management business in Japan, the world's fourth largest corporate travel market. The move is part of the company's strategic expansion plan within the Asian corporate travel sector. FCM Japan will be operational from January 2021 and headed by the General Manager Kenichi Shiraishi, currently the leader of NSF Engagement's corporate travel business. And also grabbing the attention of the shareholders, shares of the software firm Technology One gained as much as 3.5% on acquisition news. The Brisbane-based enterprise software as a service company has signed a cash-funded deal to acquire Scientia Resource Management, a United Kingdom-based company servicing the higher education sector. This is the company's first international acquisition, valued at around 22.4 million Australian dollars. And as per the deal, Technology One will make an initial payment of 11.2 million Australian dollars, while further payments would be based on achieving earn-out targets by the 2023 financial year. And up next, shares of Lendlease Group, an Australian multinational construction, property and infrastructure firm, dropped as much as 0.7% following an ASX update. The company has appointed Tony Lombardo as managing director of the company, and the announcement came 3 months after he succeeded Steve McCann as the chief executive. From the 3rd of September 2021, Lombardo will assume the roles of managing director and global chief executive officer, while his terms of employment would remain unchanged, Lendlease said in an ASX filing. And let's move on now. The share price of Mont Royal Resources plunged as much as 15%, pairing the opening gains, and the stock rallied 14% in the opening deals after the mining company unveiled a plan to acquire stakes in Australian proprietary firm Northern Lights Minerals. The company, in an exchange filing, said it will acquire 75% shares in Northern Lights Minerals with the right to acquire a significant land package in the Upper East Main Greenstone Belt located in Quebec, Canada. The company will raise 4 million Australian dollars in conjunction with the proposed acquisition. The next big news comes in from the shares of DTI Group, which climbed 5% on plans to raise 2 million Australian dollars via a fully underwritten entitlement order. And the capital will be raised by way of a 143 non-renounceable entitlement offer by issuing around 111.7 million new shares at 1.8 cents per share. A non-renounceable offer is issued by a firm to its shareholders to buy more of the company's shares. It is slightly different from a renounceable offer, and it is not transferable and cannot be bought or sold. And the shares will be issued at 12% discount to the 30-day volume weighted average price of DTI shares for the period of 2nd September 2021. And the funds raised will be used to provide necessary working capital and to strengthen the company's balance sheet for future growth. And it's time for another short break, but please stay tuned with me on Kalkine TV as I'll be back with more trending updates for today. Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the crypto buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV. Hello and welcome back. Sage again, and you're watching the market closing commentary on the last trade show. And in our next segment, we'll take a look east towards the Asian market performance. We will especially explore why Japan's Nikkei was the best performer in the region, rallying over 2%. And in the last segment, we'll see why cryptocurrency is trending. Let us first start with the Asian market's performance, and shares in Asia's Pacific region were trading mixed on Friday, with Nikkei and Taiwan's weighted rising, while the Hang Seng and the Shanghai Composite floated in a negative terrain. And the firm cues from Wall Street supported the market, while concerns about the potential slow growth limited the up move. Japan's Nikkei was the best performer in the region, rallying over 2% on reports that the Prime Minister Yoshihide Suga will resign this month. As per the report, he will not be running in the upcoming leadership election. It was followed by Taiwan's weighted index, which rose 1%. Now, South Korea's Kospi climbed 0.7% and Indonesia's Jakarta Composite rose 0.15%. And in a similar fashion, India's BSE Sensex rose 0.35% in the opening deals, while Thailand's SET Composite added 0.15%. Meanwhile, China's Shanghai Composite traded lower by 0.15%, and Hong Kong's Hang Seng tumbled 0.5%. The Straits Times Index in Singapore also traded lower by 0.2%. Moving on now to the US. Wall Street closed higher in the overnight trade as concerns over economic growth eased, with layoffs hitting their lowest levels in over 24 years. The Dow Jones rose 0.35%, while the S&P 500 ended 0.28% higher. And the tech-savvy Nasdaq Composite gained 0.14%. And we've reached the last leg of the show. So in this segment, we'll take a look at the crypto market's performance. And the major cryptocurrencies edged higher on Friday amid sustained buying, as investors' sentiment was boosted by positive news and optimism about the growing demand from institutional investors. The market sentiment was lifted by reports that El Salvador has approved acceptance of Bitcoin as legal tender. And adding optimism to the market, Binance, the world's largest exchange, proposed to launch initial public offering of its US affiliate within 3 years. The price of Bitcoin, the world's largest cryptocurrency by market capitalization, was currently trading 0.5%, and the most popular currency surged nearly 6% in the past 24 hours trade. Meanwhile, Ether, the world's second largest crypto, was also up 0.5%. However, Cardano, the third largest cryptocurrency by market capitalization, dropped 3%, while Dogecoin prices fell over 1%. And among others, Stellar, Uniswap and Litecoin edged lower. Well, it's a wrap in the last trade show. Keep watching Kalkine TV for more trending market updates.